You've been searching for the best way to generate passive income in your life and heard that real estate is a great way to do it. But you're tired of all the so-called gurus who are all talk and no substance. Get ready to celebrate because Kevin Buck has spent 14 years successfully making it happen. This is the Real Estate Investing for Cash Flow podcast. Now, here's Kevin Buck.
Hey guys, Kevin Buck here, and I want to welcome you to another episode of the Real Estate Investing for Cash Flow podcast. Our mission is to help you build and maintain massive amounts of cash flow through income-producing real estate investments. Our guest for this week's show is self-storage expert Rick Beal. Rick is the co-founder of Cubes Self-Storage, a company that operates state-of-the-art self-storage properties in both Utah and Washington State. Rick has been intimately involved in the self-storage industry for 9 years and is a frequent sought-out-after keynote speaker, panel expert, and trusted source for informed perspective on the self-storage investment opportunities. Now, as you guys are aware, I'm a raving fan of building sustainable streams of cash flow via real estate. And although mobile home parks are my very first choice as far as an investment vehicle is concerned, I'd have to say that self-storage would come in a very close second. Probably actually in a tie with multifamily and then followed up by senior living and parking lots. Those are all my favorite asset classes today. So my goal during our time today with Rick will not only be to better understand what makes self-storage a great asset class, but also the micro-level economics behind the investment itself. So I'm excited to get on to the show with Rick, but before we do, here's a quick word from our show sponsor, Sunrise Capital Investors. Hey guys, Kevin Buck here with Sunrise Capital Investors. As you are hopefully already well aware if you've been a listener for any period of time, my goal has always been to provide you with as much value as I possibly can through my two podcasts, Real Estate Investing for Cash Flow and the Mobile Home Park Investing Podcast. As our audience continues to grow, literally, we've been downloaded millions of times by folks in over 125 countries. I've had thousands of people reach out looking to get involved in our niche. And that's the phenomenal niche of mobile home park investing. For those that don't know, I've been a full-time real estate investor for nearly 20 years now, and I've personally invested in and have owned apartment complexes, various commercial properties, hundreds of single-family rentals, and I've interviewed some of the most successful investors in just about every other asset class, and I've arrived at this one very simple conclusion. Mobile home parks are hands down the best investment I've found to date. Why? They provide investors with the best risk-adjusted returns out of any other real estate sector that I've seen. Investing in real estate can get complicated, and I really want to simplify this process for you. If you're someone who wants to diversify away from the uncertainty of Wall Street and allocate a percentage of your real estate portfolio to mobile home parks, but maybe don't have the time nor the inclination to personally locate good deals yourself, then our team will do it for you. At Sunrise Capital Investors, our team specializes in the acquisitions and management of undervalued and highly profitable mobile home parks. And we are now providing accredited investors with an opportunity to participate directly alongside our team in our up-and-coming deals. And let me say this, I believe that we are hands down the best in our space at sourcing highly profitable off-market deals. That's really what makes us unique in this niche and as investment managers. As stewards of your capital, we truly are aligned with our investors. We've structured our investment fund so that we as a company are incentivized in the same way the investor is, which is through the performance of the investment itself. In addition, we want to make sure that we not only make money for our investors, but that they understand how it's being made. That's why we provide our accredited partners with a private monthly podcast that walks them through the detailed updates on how their investment is performing. And we're very transparent, providing you with the good, the bad, and the ugly at times. And so if you'd like to learn more about the partnership opportunities with our team here at Sunrise, please go visit sunrisecapitalinvestors.com and click on the investors link to get signed up. It's absolutely free and you'll get placed on the priority list of when new opportunities come along. Also, feel free to call us at 833-CASH-FLOW without the O. Again, that's 833-CASH-FLOW without the O. And one of our investor relations team members will help you schedule an appointment to speak with one of our managing principals. If you have questions, go ahead and schedule a call and let's get on the phone and talk. And with that, guys, I like to leave with one last thought. From the time that I wake up in the morning till the time that I lay my head down the rest of the evening, my number one priority with everything I do, whether it be recording this podcast, working for our investors, helping each of you reach your investment goals, to providing a great experience to each of our residents who reside in our communities, is to add huge amounts of value to everyone that I come in contact with. Now, with that being said, I look forward to the opportunity of bringing value to you through Sunrise and through this podcast. Thank you for your time. Now, let's go ahead and get back to the show. All right, ladies and gents, it's my honor to welcome Rick Beal to the show. Rick, how you doing today, my friend?
Hey, good, Kevin. It's good to see you.
Yeah. Well, thanks for joining us. And just to give a sense of geography, you're joining us from the Salt Lake City area, correct?
I am. Yeah, Salt Lake City, Utah.
And today's your birthday, man. Happy birthday.
It is. I've hit 30 about 4 times already. So,
well, I feel very honored and somewhat special that you're taking your day of the entire year out to spend with us here today. So, really looking forward to it. I know that you're heavily involved in the self-storage industry. You've been involved in it for 9+ years. But instead of me trying to give what your background is, I did a brief introduction there, but I'm sure it goes much deeper than that. So, if you would, Rick, take a few minutes and just give a little bit more of a background to our listeners about yourself and how you got into this industry.
Yeah, absolutely. I don't think anybody starts out in self-storage on purpose. If you do, I think you're kind of a glutton for punishment. But it's a great industry. I've really enjoyed it so far. When I started out in self-storage, it was a very interesting history. I started out just as a normal employee at one store. And that one store, when I started there, I just kind of did everything like everyone else did. And so I have a really good basis ground knowledge of how operations and day-to-day actions actually work. And from there, I kind of wrote my own role and discovered who I was in the self-storage world. And as I expanded that, I learned things, brought things from outside industries into self-storage. And we grew. So we grew from 1 to 2 to 3 to 4 to 5 to 6 to now 7 over the last couple of years. And then after that first one, I was just intricately involved in site selection to financing to operations to everything. And so it's been a really interesting ride so far. My major is in political science, one of those useful majors. So it wasn't out of the bat, wasn't my wheelhouse. And so it's been a really good thing to learn. And it's been a really good thing to put practical experience into knowledge.
Okay. So you had mentioned that you started as an employee at a self-storage facility. Was that your first investment where you were just working in the business, or did you actually have a job as an employee with another operator, which is what introduced you to this niche?
Yeah, that introduced me to this niche.
Really?
Is into self-storage. And so that's kind of how I got my job. I actually went to a self-storage place and asked if they were hiring of all just random things. And I kind of just moved down here to Salt Lake City and was looking for some temporary employment to just get busy for a little bit while I was seeking out new opportunities. And that's kind of how I fell into self-storage. And then after that, it just increased from there.
So it wasn't premeditated. You didn't say, hey, I want to get involved in this niche and I'm going to go out and actually work in the trenches and then, learn intimately how this business operates, the mechanics of it. I mean, it was just you looking for extra income and it grew into something much larger than that.
Absolutely.
That's a beautiful 100%. Thing. I love
it. Crazy ride.
You found your calling in life. A lot of people have not done that yet, but it sounds like you found your calling and it happened by accident. So talk to me about your life before that. Then I know you say you were looking for other opportunities. I mean, did you have experience in real estate, or was this your first foray into it? You know what? This is my first time of the rodeo. And
really? So, wow. A lot of times in storage, guys are like that as well. Guys are very new to it. And so, there's a lot of great industries. There's a lot of great lessons you can learn. There's a lot of great classes that are out there that tailor to the experienced guys, to the very, 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 hey, I just sold my construction company. I want to get into self-storage, which is a lot of what the industry is. I mean, the REITs own a big chunk, but the vast majority, 75%, 80% of the self-storage world out there is owned by mom and pop self-storage places, by guys who own less than 5 facilities. That's the vast majority of self-storage out there. I mean, it's changing, but that's an interesting statistic when you look at it being a, multi, $30 billion business.
Mm-hmm. So let's talk about that real quick. So just to clarify, you'd said approximately 25% owned by larger institutional investors, and the remaining 75% are operators that own 5 facilities or less, either mom or pop or small professional operators. Is that correct?
Absolutely. Even though we're pretty sophisticated and pretty, we're 4 stories straight up, temperature controlled, the elevators, all that stuff. We're not mom and pop, but, we're under the small operator list right now. So we'd be classified in under that. But, there's a handful of guys who own the, 100 plus facilities out there, and they do a very good job. But the vast majority are people who own, 5 and under, which is a cool thing to have in an industry.
Mm-hmm. So how many self-storage facilities are there in the U.S.? And I don't know how you classify, because I know you go out in rural parts of the country and you see like one building, it's got like 10 garage doors, right? And I'm sure that's classified as a self-storage facility or mini storage facility. But what's kind of the minimum baseline when you say it's a facility, not just one building? Is it like 20,000 square foot or 15,000 square foot?
There's probably I don't know. Last time I checked, I think there's probably around about 50,000 in the country today. Okay. There's really no like just basic. There's classes out there, type Class A, Class B, Class C. Class A facility would be something like us. Temperature controlled, individual unit alarms. The whole 9 yards. Class B facilities would be a really nice facility. But it's a drive-up facility. It's one of those ones that are covering, 5 acres of land, a really nice facility. And then you have Class C facilities of ones that you probably don't want to be at anywhere after dark, or places that are pretty, pretty hammered, and they need a lot of money to be put into to reinvest and to become better. And so, a vast majority of the industry is B and C class. And A classes are growing because, storage is in a boom right now. And so a lot of A classes are being built. And so that's kind of where self-storage lies at. And so, usually the typical mom and pops, because, B class is much less expensive to build than A class. If you have the property, if you have the right area, that's usually typically where people have a tendency to go to is those off the bat.
Got it. Okay. So talk to me a little bit about your business model. I know that you own 7 facilities today, and from our prior conversation, you essentially develop them from ground up, right? So you're not buying existing facilities and improving on them. You're building from ground up, fresh, brand new, right out of the gate. Talk to me a little bit about that decision. Why have you chosen to go the development route versus buying existing opportunities that are out in the market today? As we just discussed, there's a lot of self-storage facilities out there, 50,000 roughly, and 75% of those are owned by smaller operators. And so I'm assuming that there's a great segment of the marketplace that allows opportunity for folks getting into this niche to buy existing versus, building from the ground up stage.
Yeah, absolutely. I ask myself that question all the time because, we're opened up a facility in 3 weeks right now, and it has 650 empty storage units. Yeah. And that's a big task to start out with. And it's a little hairy sometimes. And yeah, I get popped up emails all the time about facilities all the way around the country who, have great flow, cash flow right off the bat. There's a lot of advantages to that. So it's just kind of what you want to do. We feel that we just want to bring and offer a really good, high class experience to customers. And that's kind of what our brand stands for. And so there's certain things that we want. We want the 4-story, 4 or 5-story. We want the temperature control. We have a, huge covered load-in, unloading area that people drive through. And that's just part of our brand of what we'd like to do. And so because that, we have found that we can, charge higher prices than a typical place. We can adjust prices for a little bit better, and they've turned out really good. I'll probably say probably our locations are the best, probably in Utah, and probably the most expensive as well.
Okay, fantastic. So you're basically the leader in the marketplace. You guys want to be the premier self-storage operator and in your given marketplaces. That's really what your niche is. Absolutely. You have a better product. You've got the best widget out there as far as those that want to store their items, their valuables in a climate control facility. So I'm assuming you don't have any units in your self-storage centers that are non-climate controlled, it sounds like.
We have one, but that's when we took over. Okay. We manage that one. It's a little different thing. But, Extra Space Self-Storage, one of the biggest REITs out there. I mean, their corporate headquarters is here. And so, you know, I mean, one of the biggest competitions we have is Extra Space, and they have a lot of money, and they want to make Salt Lake City their you know, the crown jewels. And so, you know, we're competing with some big players in the game, and we're, you know, we don't have that much money.
Let's talk about that a little bit. There's some heavyweights. I mean, there's some big elephants in this space. And how do you compete? How does one like yourself, especially that's building ground up developments, how do you compete against the big boys? I mean, they have endless marketing dollars. I mean, they literally probably have specific meetings on a weekly basis on how to crush the little guys in this business, right?
Absolutely.
So how do you guys compete?
You know, I have a friend that works at one of the REITs. I won't tell him, but you know, they have their budget for SEO spend is like $35 million a year. And I'm like, what? I mean, you could buy like all of our facilities for, you know, for that much and my soul with it. But, so yeah. So, you know, when it comes down to it, you know, I see, and it's good because storage is getting more sophisticated now than it has been for many, many years. You know, you get people who put things through algorithms, things that put through pricing models and all those things. But, you know, what it comes down to is customer behavior. And 98%, 95% of your storage comes within a 3 to 5 mile radius. It's just like a gym. Mm-hmm. You're not going to go to a gym that isn't by your house unless it's a specialty thing. I'm not going to go 5 miles away to go to a gym. And that's what it kind of comes down to. I mean, it comes down to that, and it comes down to competition. And I always tell people, you always want to put storage in places where people don't want storage.
What do you mean by that? Can you elaborate on that?
Sure, absolutely. So if you want to put storage where storage is zoned, you're not going to get high price storage. If you want to put storage where, you know, out by the airport or by the prison or by the, you know, the place where people want storage, you're not going to get your premium product. You're not going to get what you need. So we kind of take more of an approach of finding where we want, say, hey, we want to be on the corner of, you know, whatever, State and Main. This is our bullseye right here. What are we going to do to make that happen? And so, you know, we draw a circle around this bullseye, and then we figure out what we can do. And we knock doors. I mean, you know, there's not many of us that do this. And we knock doors, and we try to figure out if we can make it happen. If we can make the numbers happen, we can buy the land. If we can do this stuff, then we go talk to the city. You know, every one of our facilities, we've had to change zoning. But it's, you know, it's very strategic. And that's what it comes down to. Always put storage where people don't want storage.
I love that.
But it's also easier because we only need 1.25 acres because that's our.
Because you're going up, you're building up.
Yeah, because we're going up. I mean, you know, if I had 7 acres and I wanted to go to downtown Salt Lake City, that's not going to happen.
Not going to happen.
Yeah, you know. But yeah, always put storage where people don't want storage, and then you're going to be more profitable. And you know, yeah, you can compete against the big guys. Absolutely. You know, there's one of our locations that have 2 Extra Spaces on the exact same street, and we are the price leader on that. And we don't do the first month free, and we just don't do those things. We have a very different pricing structure, and things change, and we're just much more transparent with the customers. And we have that benefit of being able to do that as opposed to the complex algorithm that comes down from wherever, and the customers or the manager doesn't have any ability to do anything or say anything about it. So you can definitely compete about it. You know, you're not going to win the SEO or the pay-per-click ads, but, you know, I mean, we rank SEO just right up there with them too. And, you know, our SEO spend is, you know, $1,000 a month. I mean, that's
a fraction.
Yeah, a fraction of 35, you know. But yeah, I mean, you can do that. But you just got to be smart.
I want to talk a little bit about this newest facility that you guys just finished building, 650 climate controlled storage. What do you want to call them? Storage garages. What is the typical lease up phase for a facility of that size? I know every market's a little different, right? And but for this, given facility. Tell us where it's at, and then what your projected lease up time frame is.
Yeah, it's outside of Salt Lake. It's in a veteran community called Draper, Utah. Great growing community, high income, high traffic. It's a great place. There's some competition in the area, but the competition's kind of maxed out. And so, we found a niche. We went somewhere where people don't want storage. We didn't go on the other side of the freeway or places where they want storage. But, right now we're going in on pretty aggressive rates, typically. But, we're looking probably about a 2-year lease up rate. And that depends on what we want to do. If we want to be a little more aggressive with rates, we can be, because we have a very different pricing structure than the typical self-storage companies out there. And so we tend to have a better growth potential and better revenue stream than a lot of places out there from the get-go. Just a different philosophy, a different way we do things. But it's very different. And so, we have about a 2-year lease up on average, give or take. But yeah, 2-year would be a good, comfortable time.
What's the average cost to build per square foot for a facility like your own versus, one of the, more spread out, that has a mixture of climate control, non-climate control? And, you had mentioned, gave the comparison of like 5-acre parcel, all 1-story facility versus yours, which is 4 or 5 stories going straight up on maybe an acre and a quarter parcel. Give us an idea what the construction cost differences are between the two different business models. Yeah,
that's an area specific one, because our land in our Seattle store was.
If you remove the land out of it, just talk about the building itself. Is that a number that off the top of your head or no?
Off the top of my head, I can't quite remember that, because that's something that we talked about 2 years ago when we started it. But obviously it's much more cost effective to build the 7-acre one than it is to build the 4-story one. But in the long run, who's going to get the better rates? Who's going to get the higher rates? We charge, we're getting $70 more a month for 10 by 10 as opposed to the guy, down the street who isn't. When you're playing a long game and you're talking about, a 6% cap rate, it's a big difference. And you're full, you're 98% full, and you're renting it like that. That's a big difference down the road.
Mm-hmm. I don't want to jump all over the place, but I've got a lot of questions that popped to mind. So I'm going to ask them so that I don't.
I go everywhere.
Lose track of. Okay.
I'm good.
You mentioned cap rate. You'd mentioned the difference that $70 a month, pricing difference, how it benefits on a potential sale or a refinance, utilizing a cap rate. Give me an idea what your exit looks like in your business. I mean, you guys have 7 facilities today. Obviously, you're going to continue building more, but what is the long-term play for Cube self-storage? And I know that things change. What the market's doing, it makes decisions sway back and forth as the future rolls towards us. But just generally speaking, what is the long-term strategy of your business?
Well, right now we're figuring that out, because I have some partnerships that are kind of on the sunset. And things are kind of settling down for them, and I'm kind of ramping up.
Yep.
And so I'm getting ready, and they kind of don't want to sign on the debt line anymore. And so we're just looking for the new opportunities. I mean, we have people who want to really invest. I mean, our investors are getting a crazy amount of return on their investments right now, an insane amount of investments. I mean, it just shocks me when I look at the P&Ls, but. We could sell. Absolutely. The REITs talk to me all the time when we go to the places. But, I don't know. Half the fun is building something fun.
Yeah.
And participating in what I like about it best is you get to grow people and you get to change people's lives. Our employees are very, that's very employee centric. And that's important right now. And so they take an active role in helping build the company. Help find site selections and stuff like that. So they learn stuff. So right now, just in a growing phase, and that's kind of where we're at right now.
Got it. Got it. What does that financing look like? I know you're not heavily involved in the financing side of your operation, but from a debt standpoint, when you're developing these facilities, does it go from recourse debt during the development stage, and then once you get stabilized, you can do more permanent takeout non-recourse debt on the types of facilities you're building?
Yeah, you have your construction loans, and you start out there. I mean, we're at an unfortunate position where while we have a company, we operate pretty lean. And so, I'm an investor. And so when the city changes their mind, like they did in this project, and they want this paneling as opposed to this paneling, and it costs us an extra $300,000, part of that comes from my bank account. It doesn't come from the company; it comes from me. And, I feel like I'm going to go recycle some aluminum cans sometimes to help pay for that stuff. But, it just goes throughout. We have great investors. We have great, money that we put forth in this stuff. And we roll through the construction loans, and then we refinance, and we go through that stuff and meet our covenants and everything like that. So.
Got it. Well, I want to talk about the industry as a whole. It's not an old industry. In fact, it's probably one of the, if you really want to classify, compare it to the other, major food groups in commercial real estate, it's probably actually one of the newest, if not the newest, segment of commercial real estate. And I don't know what the statistics behind that, but I know that it originated back in the 70s. Is that correct?
Yeah, correct.
And it had the term mini storage, not self storage. It started out as mini storage. Is that correct?
Yeah.
Okay. When did it really take off? Like, what was the transitional point for this industry that it started being recognized? Was it in the 80s or 90s?
It probably started, you're looking, it had, some pretty good growth. I mean, nothing extreme at all until maybe the 90s. And that's kind of started when some of the big players came into fruition, and that's where a lot of the older facilities are out there. But 90s came around, and then it's just exponentially exploded. And right now, I talk to my friends in the industry, and it's I foresee some writing on the walls in certain areas, and there's been municipalities who've put restrictions on self-storage now. There's ones in Washington, there's ones in Texas, Colorado. And so, there's a lot of self-storage being built right now. And so, if you do want to invest in self-storage, you need to be smart about it.
I want to talk about that. It's one of the things that I had listed that I wanted to ask you is, how does one insulate themselves from competition in this in this investment space? I mean, in the mobile home park niche, that's one of the beautiful aspects of mobile home parks that I love. Municipalities hate mobile home parks, right? Probably 10 times more than they hate self-storage facilities. And so it's very, very difficult, if not impossible, to get approval to build a mobile home park in majority of the municipalities across the country. And so the locations that are existing today, that are in existence, that are grandfathered in, that's what's there. That's what's going to be there forever. There's going to be no more. And so I don't have to necessarily worry about, and this doesn't always apply, but for the most part it does. I don't have to worry about purchasing a mobile home community in a great market and then someone buying the 10-acre parcel down the road and building a competing operation. I just don't have to worry about that. So I'm very insulated. There's a huge barrier to entry. I mean, it's almost a insurmountable wall that someone would have to climb to become my competition. How does one insulate themselves, an investor, from the risk associated with that in the self-storage space?
Yeah, part of my personal philosophy and what I believe in is, number one, building storage where people don't want storage.
Go. Yeah. So you're very unique. I mean, you guys are building it in very hard to build locations, right?
Yeah,
so
I mean,
you're essentially creating your own barrier to entry in markets that probably don't, I mean, they have barriers to entry, but like you're uniquely positioning yourselves in very strategic locations that, I mean, you're putting up the brick walls around you and saying, hey, good luck, guys. It took me a while to get this done, and we put a lot of this, have fun, because I guarantee they're not going to let you do this again in the same area.
And, it's hard because, if we lowered our standards to, expanding more and going to easier targets, we could have, 15 stores right now. They wouldn't be producing nearly the revenue that we are right now.
Mm-hmm.
not nearly the revenue. I would rather have 3 stores that we have right now, just any 3 stores that we have right now, than 9 stores, just because of how they're operating
Mm-hmm.
and the revenue they're producing, because of the strategic idea that we came with. But so that's number one is finding the right site. I go down here by the airport in Salt Lake, and there's maybe 6 storage facilities, and everyone's offering 2 months for free, 3 months for free, a year for free. I mean, everyone's
Yeah.
They're just wheeling and dealing. And then I went down this street, and there is another facility just being built. Wow. And it's probably 2 months out, and it's off a street. It doesn't have any traffic, and it's probably a 400 or 500 unit facility. Mm-hmm. And it has all these competition. I mean, there's probably, I don't know, 3,000, 4,000 storage units within a mile radius. That is not a marketplace I would want to be in.
Like, what do you think the developer of that particular facility, what does he maybe know or not know that you know? I mean, because just given the common sense aspect of driving down that road in that area and seeing 6 other facilities that are offering very aggressive concessions that have obviously vacancy, and yet he's putting another 500 units in. I mean, does he maybe know that there's another 1,000 rooftops coming in that immediate area, or is it just thinking that if you build it, they will come? Because I feel like that is, in that scenario, that person might be setting themselves up for a very challenging run. Not that it won't be successful at some point, but it's going to take a lot of time. Whereas if he had been more strategic with his decision making as far as location's concerned, and maybe pay a little bit more for the land, right? I mean, instead of buying the cheapest land in the industrial area of town, he might have had better success in the long run.
So 2 points on that. The first one being that you can make good money in self-storage. People make good money in self-storage, but people who know how to do self-storage make great money in self-storage.
Mm-hmm.
So it's a big difference between a lot of that. And there's a lot of guys who, a lot of people think they know how to operate self-storage, and I mean, it's not rocket science. I can do it, so I'm not that smart of a guy. And if I can do it, anybody else can do it. But you can make good money or great money, and limit your liabilities and limit your risks and a lot of that stuff. And so that's part one. And then part two is, a lot of times, like where you said, where the rooftops coming, where things are coming. I don't like that. That makes me nervous of putting a facility somewhere and hoping or planning on it coming to fruition.
Yeah.
And, I'm sure, there's growth going on in certain areas in Salt Lake City that, I can see it, in 2 days, another, mile has been built. But I don't like that, because I just don't like waiting for that to happen. I'm not a land bank, and so I can't afford to wait for that. And so that's why I put my facilities where rooftops already are, mm-hmm. apartments are, everything's right there already. And so, not that it's right or wrong way. I mean, I know a lot of successful operators who put them out there and say, hey, you know what, I'm good to go for a year or 2 years, and I'm okay with that because I have other supplemental stuff to get there. And when it fills in, it fills in. And that's fine. But it's just not the way, I can sleep at night.
Yeah, no, I wouldn't be able to sleep either. So I appreciate you answering that question, because that's a challenging one, right? Everyone wants to know that. Everyone speaks how great self-storage of an asset class, how great of an asset class it is. But you can't just paint a broad brush stroke across just like you can across multifamily, like you can across retail, office, right? It's all location, location, location. And the unique thing about your business is that you guys are picking high quality, incredibly difficult to build locations, which I love. I love that business model. So talk to me about the site selection process. You guys obviously look for existing rooftops, but is there a general formula that you guys are seeking? I'm sure you take into account existing self-storage options in that immediate 3 to 5 mile radius that you talked about, traffic counts, existing rooftops that are in place. What are some other economic drivers that really drive your site selection process?
So it's really interesting. And I talk to vendors all the time who give me the latest and greatest of demographics of, hey, there's, in your demographic area, I mean, the people here eat Papa John's pizza as opposed to Little Caesar's pizza. I mean, demographics and data it's just insane. But, I mean, again, when it comes down to it, sure, it may be in the lower income areas, I probably couldn't afford to do that. But when it comes down to it, people still care about their stuff. And they still want to store their stuff in a nice, clean facility. And so if you can provide that to people, it doesn't matter where you go. You can go to a lower income area, and you probably won't get the high rates you want to get in a higher income area, but you can still provide a good service and good place. But basically, our system isn't very complicated. We put a bullseye right there, like I said, on the map where we want to be at. We try to get there. We look at density population. Roughly 10% of a given area needs self-storage. And so I feel comfortable with lowering that a little bit. I go down to 5%. That's just me. And so I take that 3 to 5 mile radius, and I look at the population, and I use a 5% of that current population will need self-storage. And then I look at competition in the area, and I go rent a storage unit in that competition, and I go count how many doors they have, and I go count how many are occupied, and I shop their rates, and I do all the due diligence that I can. And you basically compile that information, and then you came up with a pro forma, and you come up with everything and see if you can make the numbers work.
How about median household incomes? Is that one of the factors you guys take into account?
Not really. Okay. I mean, it's a factor, but it's not a huge factor. And part of it has to do with, I mean, Salt Lake isn't Salt Lake City is a pretty well off, high income, growing area, but it's not a primary factor. I mean, it's 5 or 6 down the list. Okay. I mean, typically it's location and competition. If there's no self-storage in the area and there's no competition in the area, people are going to drive to you. I mean, you can be down a street, sideways down an alley, and people drive to you.
What's the average length of stay for a tenant in your facility? How long do they keep their stuff there on average?
So 16 months in one of our facilities. Wow. And then the other one is 10, which is odd because there's I mean, these two that I'm giving you examples are 4 miles apart, but huge difference in demographics. And 60 months, 10 months, our average customer, average unit rate is, average is about $160 a month. And so, here's the cost to your customer right there. So multiply that out, one of them is worth $1,600. The other one is, more complicated math than I can do in my head.
What's the major change of the demographics? What's the difference there that you think one stays an average of 10 months versus 16? Is that location where there's an average of 16-month stay, is it a higher income demographic?
Not income, but it's more of a less transit area, less apartments, more.
Got it.
Okay. The other one's higher rates, which is interesting. The one that has a longer term has higher rates, so people stay longer and they pay more, which is interesting. But the other one where it's lower rates and they stay less, they don't stay as long. Interesting.
That is interesting.
Trying to collect data. I mean, you can ask so many questions, but
right. Okay.
Yeah, it's really interesting though.
So,
yeah.
I was going to ask you, what are some of the, the latest developments or the greatest developments that are happening in self-storage? I mean, we talked about it being, it's not that old of an industry, but obviously a lot has changed over the past, 40, 50 years since this industry was really born. And so talk to me a little bit about, how technology is coming into play. I don't know if there's, virtual locations now to where you don't even have to have a an actual sales staff or a team member there present to where someone could go rent a facility. So talk to me a little bit about technology and how you see the industry changing and some of the big, transitions from when you got in 9 years ago to what's happening today.
Yeah, absolutely. Thank goodness now we're starting to get a more sophisticated owner operator, which is great because that tendency comes with higher income, higher pricing level, not as many concessions. So that's good. So people in general are becoming just more educated. Technology is coming there, the ability to go online and rent a storage unit from start to finish is, everyone can do that now. I mean, there's no secret. The REITs don't have a corner to that because they have a marketing program. Mm-hmm. So a lot of the stuff has developed and there's, specific companies that are within the storage industry that will help you develop your website, help you do all these things. And so, a guy who owns one facility or two facilities can do everything that other places can. There's advancements in technology for unit alarms, retrofitting places where you can retrofit unit alarms that are in an older facility, because that's a big sell. People like security. And so you can retrofit and put new unit alarms in there. And so that just goes along with everything that's coming along. And what's interesting is as much as new as the industry is and has changed in the industry, there's also coming up with more competition and more branches of self-storage have come out. Those are what they call Clutter is a new company that came out. They're a bunch of friends who work from them. They're valet storage.
Okay, so, I've heard of that.
Yeah. So they'll come to your house, pack your stuff up, take it to a warehouse somewhere, and if you need it, they'll come out and bring you your bin to you. Very good for very urban, high-density marketplaces, San Francisco, Seattle. I mean, you can get a 100,000 square foot warehouse basically, and stack it and rack it and put stuff in there. So it's more of a logistics company as opposed to a storage company. But they've got a big following, and there's some smart individuals who work for there. I mean, they are smart, and so they're starting to take out a little bit of the chunk of self storage, and they're there. Other companies, there's a local company here that's trying to get some traction, where they're kind of the Airbnb of storage, of where if you want to, you can rent out your garage or an empty room in your house or a closet, and people will come into your house and store their stuff in your house. There is just a long list of issues there.
Yeah, that's a stretch, but no, I get it. I can see the fit. Sure.
It's a thing that I think self storage just has to be constantly evolving and listening to customers out there to be able to stay abreast in these things. Because I can see it be kind of a death of 1,000 cuts, and so unless you're really knowing what's happening and you can really see what's trending in the future, you need to be aware of that stuff. And you were talking about automatic facilities. There's a lot of really successful operators out there who will open a facility and they'll have one person staff it, and they'll have 20 facilities, and it's all on kiosks. So people go there and they rent on kiosks. They do everything on kiosks, the storage unit, everything like that. And that's it. So there's no people there. There's no anybody there. And they have one guy who foresees kind of the operations for 5-10 facilities. Personnel is a huge expense, and so kind of cuts down a lot of that stuff. And they're successful. But it's an add-on. You can do that if you want to, enhance your business after office hours. So there's a lot of additional things you can do for people.
Got it. How about for the new investors that might be looking to get into this space? And I'm not talking about those that have deep pockets today, but maybe looking to buy their first investment, maybe playing with a few $100,000 that want to get into this niche. Is there still a lot of good opportunity in buying older facilities and improving them? Value add opportunities, or even I see some of the trends around the country that I've noticed is like older Kmart's or big box is going by the way of the dodo bird, and so a lot of these these big box retailers, these big stores that are sitting there dark, Sears and Kmart being two of the big ones that come to mind. And I've seen numerous Kmart facilities that have been converted into self-storage facilities. In fact, recently I saw where I live, on my way home from work, there was it was on a secondary road. There was an old bowling alley that I believe was Public Storage or Extra Space, one of those two, just recently purchased and just finished building out a new facility there in an old converted bowling alley. So are there opportunities like that to get into this space for the new investor?
Absolutely. You know what? There are opportunities everywhere for that. And if you're smart, and if you have the ability to go in, look at the numbers, and again, I'm not an accounting guy. I'm an operations guy. I know how to put storage where storage needs to go. I know how to make a lot of money from it. But you know what? I'm not an accounting guy. And so, I did a facility audit for a buddy of mine who owns a facility. And I just looked through his numbers, just on a cursory, nothing big or anything like that. And he had about 20 grand, 25 grand he left on the table per month. And
per month? Per month.
Wow. And unfortunately, that is more of the rule as opposed to the exception. I go through, our books all the time and, tweak. We're doing little tweaks. I always say storage is a business of inches, not miles. So, a $5 rate increase is, will add up.
Sure.
And so, you go through people's books and you can look at stuff. I'm not talking like crazy accounting, but a lot of these facilities out there are just not ran really well because these guys are getting checks. They're golfing. They're on their boats. They're having fun. They're getting their checks and they're fat, dumb, and happy. And they have a great old couple who are taking care of the facility, and as long as it's not broke, don't worry about it. And so there's a lot of opportunities to go in there and really optimize a facility.
Mm-hmm. Are there opportunities in the space for the owners to outsource it to a third-party management company? Now, obviously having staff there on site, but the outside third-party management company would oversee the existing staff on hand. Is there that opportunity? I know in the multifamily space, in the retail, the office, industrial, every other commercial real estate asset class has that ability. Are there larger professional management companies out there that someone like myself, if I went and bought one facility today, that I could outsource that to? Absolutely.
You can go all the way up to, the REITs, Extra Space, CubeSmart. They do that. They offer that.
They all do fee management?
Yeah, they do. Third-party management. They have, I know a lot of really good qualified guys who run companies that do that. We started to do that. They've been really super successful. We took over one facility. It's the first time we've done this. We took over one facility last June. And from last June to this June, they're making $10,000 more a month than they were a year ago.
Wow.
And that's just when, the transition periods, a lot of stuff, but that's within a year.
That's impressive.
And, and it wasn't really doing a lot.
Yeah. What were the challenges that you guys fixed? Obviously there was a problem, you solved it. What was that major problem?
A lot of, rate management, a lot of things, because people just go along the sides. They were charging a lot less than what people were willing to pay. They didn't know how to manage that. They didn't know how to manage the rate increases. Mm-hmm. There was a lot of units that were just, hey, this needs to get fixed, but it never really got fixed. And 1 month turned into 6, and that turned into 5 years and 10 years. And those are 20 storage units, and they're, 98% full. So over a month period of time, those are fixed, and all of a sudden you have those. And then you do conversions, and you make smaller units out of bigger units because you have a more of a demand for 10 by 10s as opposed to 10 by 20s. And you can do that because you're charging $160 for a 10 by 10, and you're only charging, $210 for another one. So, you can do all these things to tweak and improve a business. Mm-hmm. And that's kind of how we did it.
Got it. Fantastic.
Those sales skills. That was a huge one.
Well, that's awesome, Rick. Well, I really appreciate your time. I know we're running out of it now, and I've kept you on the horn longer than I promised. And so I'd like to move on here, and I'd like to go into what we like to call the golden nugget segment of the show. And this is where we're going to kind of wrap things up for the day. And what I'd like to ask of you is, and you've already shared with us a lot of golden nuggets already during this hour together. But if you had just one last final golden nugget of advice or wisdom that you could leave with our listeners that may inspire and motivate them as they progress in their real estate investing career, what would that one last golden nugget be?
I think in my experience, it would be always listen to your customers, because your customers are always willing to pay more than sometimes you're willing to charge. That's definitely true in self-storage. They're more willing they see more of a value in your property than sometimes you do or other people do. And so they're willing to give more, but you got to be willing to charge more and believe it.
I love it.
And it's so true. Oh my gosh, that's so true.
Yeah, no, I love it. And that's applicable to any different type of real estate that you're in. Really, it is. So it's sometimes hard to step outside the bubble, your own bubble.
Oh my gosh, right? Yeah.
Well, fantastic, Rick. And for those listeners that have an interest in learning more about you and your business, how can they reach you? I know that you had mentioned your LinkedIn page. Can you go ahead and share that with the listeners now? Yeah,
my LinkedIn page, LinkedIn Storage Rick. You look at Rick Beal, Beal. But please connect with me on LinkedIn. I write storage all the time, write articles, updates, post. But yeah, LinkedIn/Storage Rick. Yeah. And please. And I'll put that in the show note too, guys, as well. Awesome. Yeah. I love to be on LinkedIn, and I love being active with that stuff. So yeah. Fantastic. So LinkedIn.com/Storage Rick without the in there. So LinkedIn.com/Storage Rick. Rick, it's been an absolute pleasure, my friend. Really appreciate you joining us. And I wish you the best here in the future, all the future successes that you have. I know you have a lot more facilities that are coming down the pipe for you guys. So keep kicking butt and doing what you're doing, my friend. And we'll catch up soon, okay? Awesome. Thanks, man.
Congratulations! Now you've got more of the best tricks of the trade in building massive amounts of passive income from real estate. For more amazing resources, visit realestateinvestingforcashflow.com, and we'll see you next Monday morning.